Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge. I hope everybody's having a great trading session. And guess what? Grego Horvat's going to be joining you guys today, so I'm really excited about that. I'm actually going to, obviously, I'll do analysis, but I have to kind of keep it quick because I want to give time for Grega. So let me go ahead and just make sure that. Let everybody know we are getting started. Give me 1 second. All right, so here we go. All right, so the dollar continues to lose some ground, and we are probing what I consider pretty key support. But let's go ahead and let's see where we're at, and let's talk about this for a second. Remember, there's still a lot of day left in today. Obvious resistance is at 90.90. That's something we obviously have to know. I'm going to write that down for the dollar index. As you guys know, 90.90. That I think is key because that's, trend line resistance right there. Also the spike high. You can see that is going to be really key resistance. The key is, or the question is, how far down is support? Because we're at 90.40, which we wrote down yesterday. So let's just double check where our fibs are intraday. So we take the spike low here all the way to the high, and we could actually slip all the way to 90.32 and still be respecting the 618. And also, if you can see here, I would say it's a pretty big support zone right through here. So I'm going to write down 90.32. Since we're below 90.40 right now, so 90.32. Let's talk about the euro dollar. So the euro is pushing up, continuing towards these highs. Now, think about this, that the euro may have put in a false breakout above these highs, right? So that would mean that we'd have to get all the way back up towards, this resistance. Sorry, grabbing the wrong thing here. We already know that these lows are significant right here because this is the 618 retracement. So we already know that. So we could write down 120.55 and be fine with that as far as support goes. Oh, my dollar Canadian slipped back below 121. I'm about ready to buy it again. I'm so irritated. I thank God I took some of the profits off at 122 yesterday, but I added two back at 121.50s. So irritating. Resistance. So this spike high right here also matches up close to the 78% retracement. All of these highs here. So it'll be coming in at 121.50. Okay, I'm going to keep us in range. Same with the dollar index, staying in range. Cable's bounce has been very shallow. Matter of fact, we can actually try this little trend line right through here. It's all going to coincide right around the same spot, which would be 141.05, 141.10. So I'm going to write down 141. Obviously, support is 140. So you kind of know where your support and resistance levels are. 140. Cable, 141. I'm telling you guys, this dollar Canadian is just going to bounce back probably pretty aggressively. If it gets back above 121.10, I'm going to get back in, I believe. So, okay, sorry. Aussie. So here we are, back at 77.60. Do you remember yesterday? Do you remember doing the Greek gods yesterday? Do you guys recall that? This is during the daily roundup. If we got to 77.60, I might actually be more inclined to sell that. Hold on. I am
a Greek god.
Yep. Sold a little bit of Aussie right at 63. Now, I'm only going to keep it intraday. I don't want it to get much further than where it's at. But if you take the high to low, resistance comes in at, and this is the 50%, or I'm sorry, the 38% retracement comes in right at 77.65. So I'm going to write that as resistance. Then the next resistance, hold on, just in case we get above that, is going to be 77.90, which will be the 50% retracement. So let's write that down. Now remember, this is all, everything's really range bound right now. So you kind of got to be respectful of the ranges. Okay. Support obviously is at 77 cents. Any dip back down to 77 cents, you got to use it as, support. So it'll be actually 76, 75, but I'm going to also write 77 cents as being support. Kiwi's had a nice bounce back. The 618 comes in right at 72.40. Support will be back down today. Intraday, I think any dip back down towards these levels, which would be, you can see all this 71.75 to 71.70. So I'll just write down 71.70 as being support. Just remember, support and resistance, these are all areas. So just the areas around here are going to be, supportive. Dollar Canadian. So the dollar Canadian just slipped back through 121. So irritating. Support will be 120.80. And guys, I'm telling you, if you get right back above this, then this was just a stop run. And remember, this was the 2017 lows. That's why you have to be respectful of the fact that we just got a false breakdown. I did adjust my stops for the pattern in play because I'm like, well, for protection reasons, but I wouldn't be short. 120.80 is support. Now we have to get above one. This is bearish though. We have to classify it as bearish because it hasn't been able to get above 122 or hold above 122, which is our resistance from yesterday, I think. Yeah. And that same is going to be that for that today. And you notice how, let's go back to the bias chart. It says 122 double asterisk. I actually sold some there yesterday because I knew it was such important resistance. Obviously, in retrospect, it's like, why didn't I sell the whole thing? I should have, but I didn't. But you guys know 122 is really key. And it proved it yesterday. Dollar Swiss. So the dollar Swiss 91 cents is obviously really big resistance. It is the 200-day moving average right here. I mean, it's actually, 90.85, but we have to get above 91 to turn. Okay. This is important resistance. I actually think it's bearish while we're below it, but I'm going to write down 89.90. I should keep it bearish just because we're below the 200-day moving average. I just, you know what? I'm just going to put it in range. I actually think we're more range bound and dollar pairs than anything. Dollar Norwegian krona. This we slipped at the very end of the day back below 835. Actually, I think that was all. It was like more lack of liquidity. Regardless, we have to get above 842 now in order to turn bullish. We just have to keep it range bound for now. Yes, I'm still long. Yes, I'm irritated. In case you want to know. Support right now is 820. Thank God it's not very big, but still. And we have to stay bearish while we're below that, while we're below 842. Since 840 was resistance, and we actually went to 842 yesterday, so we have to mark that up. Dollar Mexican peso. So we just probe below these trend lows, and I'm telling you, like I said yesterday, I think this is all flow related. I really do. I think it's all very much flow related. We've been as low as 1975. I'm going to mark that up as support because there's a chance that we just briefly hit lows and then we're going to pop back up again. But 2030 is key resistance. But look, we still have longer term higher lows, but this little breach below this low could end up being a double bottom. But I am obviously watching it really carefully because I think if we close below there, that's going to be bearish. Martin in our chat room also mentioned this is the 200 weekly moving average, which it's held us, right? I mean, look at how well it's held us all through post-COVID lockdown lows and where we're at right now. Very, very important supports here for the dollar Mexican peso, right? And by the way, Martin, if you're listening in, great view. Dollar yen, 109.65 is resistance, support 108.35, and I don't think anything's changed. Okay, let's take a look at the S&P. So as you guys know, coming out of this wedge, I think the upside in the stock market will be limited. Now we could be limited to 41.65, but still I think it's going to be the 618 should cap it, my opinion. 41.65. Now support would be back down at 40.80, which would be this hourly breakout point right here. Like I said yesterday, I sold the S&P at 4,100. It was like 4103 or something. I sold it here. And then, when we reached above this high, I just said, screw it. I don't want it. So I tried to play it on the short side, at that key, previous support, thinking it would act as current resistance. And it went through it. Now, it's pretty sloppy. The S&P is pretty sloppy right now. So, you have to take that into consideration. I just, I think if we close back below 4,100 by the end of the day, obviously for the end of the week, we have to think of that as a pretty bearish close. There's a lot of time left in today. So just want to point that out. So S&P support is going to be 40.80, just in case we do slip. Here's gold, right back up towards the 1845 resistance. Remember, 1800 is support. This is where we coincide with breakout point, the wedge resistance horizontally, and then also the rising trend line all comes through right around 1800. So that's all very important support for gold. Resistance 1845, which we're basically at, close to. Silver, trendline resistance, it is capping. I do think that we have to write down a higher resistance at 2765 because this is the longer term 618. I know we've been slightly above it, and I know we're testing this trend line. So if you are trading silver, just be aware that we're up against this trend line, and I think around the 2765 is support, or excuse me, is resistance. 2665 is support. Again, it's just like gold. It's where the horizontal trend line, horizontal breakout point coincides with the upsloping trend line. Gold has the exact same issue right here at 1800. Silver has the exact same support, but it comes in at 2665. So 2665 and resistance is at 2765, which is the 618, right? Right here. Bitcoin. Steve's favorite asset class. Bitcoin.
Absolutely.
Yes, I know. 25. You don't have to really express your love for cryptocurrencies anymore, Steve. I think we all got the point. 52,400 is resistance, and support, as you guys know. Well, first of all, the line in the sand for me is 43,000 or 42,000, somewhere around there. We had that brief spike following the headlines about Bitcoin and Tesla, and that it's basically at 47K, right? We've been as low as 45 and change, but 47,000 still remains pretty important support. Okay. All right. So there's your bias chart. Did I forget anything here? I mean, I'm pretty much keeping everything at range. The dollar Mexican peso is trading heavy too. I mean, and we're near the lows, but I know how important the 1975 level is, or 1978 level, 1980 level being the 200 period weekly moving average. So I'm just going to leave it at range, and everything else is just range bound. I hate it when the market's like this. You guys know that. I'm not a fan when the markets are just really just range bound like you see it.
Yeah.
Anyway, what's that?
Yeah. Who is?
Yeah, especially when we're just. It's just yeah, it's just really flat, really just kind of choppy. Anyway, Steve, I'm going to pass this over to you real quick. If there's any words that you want to leave with before Greg gets here.
I'm innocent.
So I'll let you guys take over. I've got, what's that?
I'm innocent. You said if I have any word.
Yeah, right. All right, guys, I'll let you go, and you guys have a great trading session. I'll see you guys in the chat room. Remember, no daily roundup today. It is Friday, so see you guys.
Bye, mate.
Bye.
Okay,
So let me see. Is Greg already with us? Yeah, he is actually.
I'm just uploading the bias chart to our friends. Let's have a look. Is he here?
Yeah, he is. He has already taken over the world. I mean the charts.
Oh, amazing. We can't hear you, Gregor.
Yeah, Gregor, we haven't heard your voice yet, by the way, mate.
He is unmuted, but we can't hear you. He's muting, and no.
Can you hear me now?
Yes.
Yes, sir.
Okay, perfect. How are you guys?
Good, mate. How have you been?
Very good.
Very good as well, It's Friday, so everything is good. Unless you're in crypto world, then you're just living the madness through the weekend as well.
True. Very true.
Yeah. Okay, so
what do you think about the volatile moves we had this week? Is it the beginning of some counter trend move or just noise?
I think that just noise. I just
Okay.
assume that we will see more dollar weakness in the near future. There is a chance that 10-year US notes will probably stay in consolidation, in my opinion, and bounce that we have seen on stocks in the last 2 days is just confirmation that there is no easy for bears. So in my opinion, we are just going to either to maybe consolidate on some of commodity pairs versus the US dollar, but eventually I'm seeing room for more upside. So
Okay.
what I really love here is I will look at the Aussie. So I've been bullish recently on Aussie, and we have seen some very nice push to the upside here at the start of May, but looks like that this turn to the downside here is just a confirmation that we are going to stay sideways. Why? Because the first drop was in 3 waves, and the next following rise was also made by 3 waves. So what is important here to understand is that 3 wave structures represent...
I understand the argument by it, but I have a question. Why a triangle and not one more leg lower for a lower low before higher?
Because you're faster than me. I will get to this point. So what is really important is because we have a 3 wave structures, 3 waves for wave A, 3 waves for wave B. So that can be part of a triangle or can be part of a flat correction, because in each case the beginning of this complex correction is the same.
3 and 3.
Exactly. So now the question is if we are going to see maybe limited downside here next week around 76.40, or maybe we'll see a sharp drop for like an impulse for a 5-wave drop of a wave C, and then we will bottom later. So the important to understand is that we are in the middle of consolidation, and that both wave counts are valid, and that both wave counts will sooner or later take us higher, but it's not a time yet to look for potential opportunities on the long side, because we are just not seeing...
Yeah, because in one case we're going to consolidate more in time, in the other case we're going to correct more in price.
Exactly.
Before
So
higher.
it's not a completed pattern yet. So, but eventually, I mean, look at this daily chart. It's very important maybe in this situation that you look and make a step back and check the higher degree time frame charts, and you can see a very nice uptrend. I mean, on a weekly, there is a very clear trend.
Absolutely. I'm with you.
There's no reason to fight this.
I was saying the same thing before on FaCe, that I like commodity currencies for higher, but we might need to see the corrective moves unfold further before that happens. So we're on the same page, Greg.
We just have to leave it market to unfold, give it a little bit of more time, and then maybe later this month it could be very interesting. I just also assume that stocks, despite this break to the upside, there is just a second. There is a chance that S&P is still in the middle of this corrective wave 4. The only question is what type of a wave 4 will form. Here we had a wave 2, very quick and clearly in 3 waves. So maybe something else will unfold here. Of course, I always go with the most basic structure. So for now, I'm expecting a 3-wave drop, but I just realized that this current wave B could be moving very close to the previous highs here, and then maybe we just stay consolidating.
Or theoretically speaking, it might move to higher prices, right, for an expanded flat. That might also be a possibility.
Yes, of course. So I mean, it's just from a time perspective, it would be just too quick to say that wave 4 has bottomed here, but there can be some still very good patterns. I mean, Nikkei index is looking very nice. I have it actually right here. Okay, so if you're still looking for some kind of a trading opportunities in this risk on context, that's maybe a Nikkei index has a better structure here. So I think that this is wave 4 maybe already finished here. So at least in the short term, there should be some recovery. There you have also German DAX that is also acting very well. So in my opinion, even DAX here could see more upside, but again after some retracements in the short term. So overall, I just think that risk on will stay here. Of course, there's a chance for further consolidation, but overall, I think that higher degree trends are still in play and visible very easily. Also, let's take a look on cable. Now, cable here has seen a very nice break above 1.4 level. I've been talking about a lot last week. We just smashed this level and then come back to this level and retest it. So it looks like that bulls for now are staying in play, but I'm looking at this 1.4 as a bull bear level, like a pivot point. So as long as we are above it, I think that there's a chance for this market to continue through. Any daily close, another above 1.4160 will probably make for strong push, will make a room for a strong rise here for a wave 5, ideally next week. Also, let's take a look on euro dollar. Euro dollar is here a little bit tricky. Maybe this wave B of a higher degree is already finished here, or we will see a retest of this very important support level here around 1.1980 or 1.2 level. You can see that we tested this level for several times when we were here in downtrend and finally make a breakdown and retested it as a resistance. Now we are above it and we have seen a very nice support. So as long as we are above that level, I think that there is room for more upside on euro. Of course, just keep in mind that maybe there can be some retest coming, especially if suddenly maybe we see a close to the downside later today, then early next week, I would look for a retest of this zone before market may again continue higher. But overall, I mean, picture is very clear here. I just think that more upside can be coming. Now let's take a look also on gold. Now gold is trading very nicely on the bullish side. I think that there is a chance that wave 3 here is in progress and could take us here back towards 1854, ideally towards 1875, where we have these stronger resistance levels back in January and at the start of February. So I'm looking for this move in the next few sessions. And
so
then,
now your main thesis is that the correction, you have enough evidence that the correction is over, the correction lower, I mean.
I'm just looking more for the near-term targets because even if that would be, as you know yourself, an ABC rise, I would be looking for a wave 5 of C to move close to these levels as well. So for confirmation, as you mentioned, I would really have to see a decisive break above this 1875. Also, at the same time, this levels represents this trend line resistance, the falling one from August high. So this is definitely a very important area that has to be broken. I think that next week, if we are really
Very
going
likely
to see, yes, more upside here. I mean, looking at silver, also, I think that here direction is very clear. Looking at the weekly chart, we reversed very significantly, and now we are now consolidating. And this is metals overall are one of the assets that are looking quite good compared to other assets that are overvalued and at the extremes. So
yeah, and commodities in general look very good.
Yes. So, but still, I mean, silver and gold from this perspective that we are just now in consolidation, there's still, as you know, to catch the other markets and commodities in general, there's a lot of room left to gain here on those.
Yes.
Now, let's take a look also on what I have here on dollar yen. Okay, so dollar yen, I think that sooner or later we will see a retest of this levels that we have seen back in March. A lot of markets has retraced or even filled those gaps from March of last year. But dollar yen is the one that still
Has not. Yeah.
Yes, exactly. So I'm looking for a little bit of more upside here, maybe after this consolidation is finished, but nothing really exciting ahead. I mean, we are still trapped in this big consolidation that may not be over anytime soon. So we'll see what happens here above or around 112, 113 level. From an Elliott wave perspective, I'm looking for a triangle, and this could limit the upside here for a wave D actually. So we'll see how this unfolds. But in the next, let's say, few weeks, maybe in June, we could see slightly higher prices for a wave D. It really depends on, as you know, on the 10-year US notes.
Yeah, it's very likely because the 10-year looks to me like it's the 10-year yield. I mean, looks to me like it's bull flagging, and of course the implications, if that's the case for USD yen, would be for higher prices, right?
Yes, I have here this 10-year, and looks like, as you said yourself, that could be this consolidation.
Yeah, you're not looking at the yields, you're looking at the bond, but which has the exact opposite formation, a bear flag. Yeah.
So I'm looking for this one. I mean, bearish level, this one has to be taken out. That's when commodity currencies could become a little bit of more tricky and even deeper pullbacks. Maybe for that wave C of a flat, as we discussed on Aussie, could be the case if this breakdown would really follow through. At the same time, gold could really hold that resistance then around 1875, maybe even 1900. So I think that this market will be very important to track to really decide if this risk on is going to stay underwater or no. So for the next.
What about crude oil? A triangle or?
Crude oil, I still think that we are here in a wave B. We have seen a very nice move to the downside this week, but haven't seen a break below this trend line. So this is still a bearish level that has to be taken out for this market to continue lower. Looking at the daily chart, I just think that, as I said, this is wave B. It could retest the highs, maybe as a flat correction, but still think that we are here in the middle of this wave 4 consolidation phase that maybe will even continue through the start of summer or through this whole summer if we are going to see that wave C to the downside.
I do think that the way it's correcting is overall very bullish, though. I mean, after such a huge move higher, it would make sense if we had like a very, very nice sized pullback. And the fact that it doesn't want to pull back, I think, shows that the path of least resistance remains higher. Of course, temporarily we might continue, but I do think that higher prices in crude are not far away.
Yeah, I mean, let's take a look at this $70. So maybe this is what we have to pay attention to, like a next potential psychological resistance. Even if I would say that we are here in a wave 4, that we already completed wave 4, which I don't like so
I
much.
doubt it. I doubt it as well.
I mean, but what I want to highlight here, that even if that would be the case and you're going to see a new high, again, you would be in a fifth wave, and still you would be expecting limited gains. So in my opinion, this sooner or later we will see a further consolidation, and then, but of course, higher degree trend is here. It's clear. Maybe for at least for me, these substructures on the lower degree time frame charts are quite tricky because, as you see it yourself here on the 4-hour, I just cannot count this as an impulse. And so in my opinion, it's just too choppy, too noise. I know that there is still higher highs and higher swing lows, which actually makes a bullish trend, but not that strong like we have seen here in the wave 3. So that's why I'm a little bit more cautious here.
What else are you tracking before we go into questions? Anything else that's in your radar?
No, not really. Actually, we covered everything what I had in mind, so nothing specific.
Okay, so let's have a look at some of the questions. Let me open the box. Okay, so platinum and palladium.
Let's take a look. Trading view, commodities. Have it here.
Oh, we forgot one asset class. We should check what you think about cryptos afterwards as well. And the recent divergence between Bitcoin that seems to be in a proper corrective move, while other cryptos don't seem to be following this type of a deeper correction.
Yeah, I just think that this is a very strong alt session and that sooner or later this one will end, while Bitcoin, in my opinion, will just remain consolidating here. What I'm doing here is and tracking is wave 4. I mean, wave 2 here had like almost, this is a daily chart, it almost lasts 1 year or so. So I'm expecting, even if that wave 4, as you know, it's usually at least similar in distance compared to wave 2, I mean, in time. And even if we put this on half, it's still, I mean, we are
It still might
far away
last quite
from
a
its
lot.
completion. So I just think that this will maybe Bitcoin overall, once all season is done, I mean, everyone will then look for cryptos, but it's like for safety, they are going back to Bitcoin.
Yeah, it's the blue chip.
Yes. So in my opinion, this Bitcoin will still could be very attractive over the long term, but just keep in mind that there can be this consolidation going forward for the next few months before maybe we get a very nice.
How deep can this retracement be, in your opinion?
In my opinion, these 30 and 40,000 are very attractive levels. That's the area of this wave 4 of the former degree here. But looking at, if we go to smaller time frames here, here is this 1 hour time frame. I cannot count 5 waves down for wave C. So either this wave C still has room for more weakness, or maybe this wave B is still ongoing. So as I said, in my opinion, there is room for potentially for more downside or even sideways correction here for this wave 4.
Okay.
Now you ask for platinum, right?
And palladium, yes, correct.
Yes. Okay. That's this has not been updated, but still, I mean, looking at the overall picture, I think
you see what's troubling me with this rebound, here. By the way.
Excuse me?
You see what is troubling already with this rebound. I mean, we had one leg lower, and I'm looking at the rebound higher. Yes.
Yeah, it's choppy.
Yes, that one.
It just, I mean, it could be retesting here, this 1,100 level, or maybe if we get a little bit of more sideways here to the right, let's say for the next month or for the next few weeks, then this triangle could still be very valid because it can be in the middle of its
I've just started wondering if it's not a triangle and it's a simple ABC and C is about to start for a move down towards 1,000.
Yes,
roughly.
Then of course that at the former wave 4 here is your support.
Yes.
This is the trend, but overall, I mean, this trend line is something that we have to pay attention on. Probably the most important. If you get the wave C, then this trend line should limit the weakness.
Palladium?
Let me take a look on this one. Here we have seen a very nice break out of this triangle formation. So it looks like that we are going to stay bullish here. Let me just... I really love how the recent price action unfolded. That could be your wave 1, wave 2, wave 3, and wave 4, and then wave 5. And what I really love here is that this drop appears to be in 3 waves.
Yes, indeed it does.
Yeah, so as long as we are here above this March highs, I think that there is a chance for more upside here. And as we discussed with gold, I mean, looks like that all markets, all of those can be in a similar, at least short-term
True.
structure.
And if you notice, copper has a very, very similar look to platinum as well.
Yes, I have copper here.
Dr. Copper.
Yeah. I've been very bullish on copper, and I still do not see this.
Yeah.
This.
I think there is more. I
Yes,
think there's
I
more.
just adjusted before I came into the webinar. I adjusted copper a little bit, and the reason or what I done here is actually firstly I had this wave D finished here and wave E here. Okay, so that was end of a triangle. But what I see here is a free wave drop, while wave C, especially if you go to smaller time frames, is much more choppy compared to the first leg. So that's the perfect personality to say that this is end of a corrective move rather than start of a new bearish trend. So what I did here is just I look back and I see that I can adjust the triangle that may be finished here. So this now goes perfectly with this structure where current drop can be wave 4 of the same degree like this wave 2, like this pullback. And also why I like such adjustments on the wave count is if there is a chance, I will always try to label the wave count so that I can stay with the trend rather than call a top. So I just think
Makes sense. Yeah.
Yes. So because otherwise I will just keep waiting that we will see a very deep pullback and pullback or sorry, drop.
So
But
probably in a wave 4 now, and that means a new all-time high in the cards rather soon.
yes. I just think that, and maybe this is something that will finally drag this Aussie higher as well. Also, if
Very likely, they're very well correlated.
yes, and also maybe we should pay attention to dollar Chinese yuan. I mean, this one is actually
Testing
around the
support.
lows. So just another confirmation that this weakness we have seen recently on Aussie is probably just temporary or consolidation overall. I just imagine this breakdown that if happens in the next few weeks or months. I just think that that's something that will move these Aussie and commodities maybe even much higher, because all markets are obviously in the same position here.
Somebody's asking specifically for the Kiwi, although I don't think it has anything different with the Aussie. I see the exact same structure there.
Yeah, I mean, New Zealand dollar, in my opinion, is still bullish. We have seen a free wave drop, and maybe this correction, this is actually, we have some very nice and strong moves right now here. So I was looking for wave 2 to be a little bit of deeper here for 61.8%, but if we can see a daily close today above this neckline, then I think that we should just keep an eye on potential more gains early next week in general.
Although I'm still a little bit conservative in calling this because I still see technically the potential for one more low in these pairs before higher. Although, I look at the Aussie, I look at the Kiwi and the structure, and they make me feel that there might be one more lower low before the correction is over. But then I look at the USD CAD, the USD NOK, and they give me more of a signal that they're already resuming the downside. So mixed signals for the time being. I'm not sure which of the two.
Yeah,
I'm sure where the direction is, but I'm not sure if the correction is over or not. That's the only thing I'm certain about.
Yeah, maybe we'll see a rather more sideways than lower. This is what I would assume. If we are really going to hold those gains here.
Yeah, that might happen as well. Yeah, absolutely.
So, I mean, if this, like we said earlier, I mean, this is something that we have to look for and be worried if we see a breakdown. Maybe now imagine if this is just a short-term rally here away from this trend line, and next week we see a broken trend line, then those moves that we are seeing right now will be also reversed.
True. Very true.
So
the jury is still out. Let's hope that next week we get some more information, because from all the scenarios, the worst type of scenarios is seeing consolidations, because consolidations are the worst type of environment you can have for trading.
Yes, but actually after such a very volatile markets for the last 12 months, I mean, it's something
Yeah, it
normal.
makes sense. Yeah, it makes sense.
So maybe if we are going to see a break to the upside, let's say on those commodity currencies now in May and through June, then I think that we should be aware of a consolidation through summer. Or
Yeah,
if
so
we
a
are
boring
going to see,
summer might
or
be
if
in the
we are
cards.
going to see consolidation now through May and June, then breakout in summer.
Yeah, it's likely. It's likely. Let's see first of all how next week unfolds, and
Yeah.
we take it from there. Anything else, Gregor, before we wrap it for the week?
No, that's it actually.
Okay, mate. Thank you very, very much. As always, very nice having you and informative. So everybody have a wonderful week, and see you back on Monday.
Bye bye, guys.
Bye bye.